Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So as in euro currency, gold market keeps the intrigue right up to the holidays. So despite we thought that's maybe not quite interesting for the trading, it's just shows that it's not stand so. So actually it's very interesting, and the performance that we have here, well, suggests that we have clear patterns, and actually this performance might be in a row with our expectation. So currently, in fact, the gold market and the euro currency is like the twin brothers, so very similar patterns on lower time frames. Everything mostly stands the same, except the only one thing. So if we, as we already talked about this, here trend has turned bullish on a daily chart, but if you take a look at the COMEX chart, you could see that we still have got bearish grabber. Well, this pattern is of course brings some risk that market could drop. At the same time, its minimum target stands not below this area but just below these lows, because grabber's minimum target is the recent lows, which stands right there. So supposedly, if even this grabber will work, it doesn't mean that we will get the drop right there. So it might be just some kind of the downside retracement, some back to the 2030, 2025 area. That's what could happen. This is first point. Second point, based on the analysis of the other markets, it's really could happen that this grabber will fail. So despite that we have the pattern, but we should also consider the overall context when this pattern appears. And based on the performance of the other markets, chances that this grabber will not work also stand significant. The only thing that could happen is, you understand that gold market is a very specific asset, commodity, that it strongly reacts on the different political and geopolitical factors. What could happen within the weekend is difficult to say. As you know about the turmoil in the Red Sea, what's going on in the Middle East, you do know what really some political turmoil inside of the United States, and we can't promise that nothing will be reported or just some really breaking news will happen. Only this reason might be a reaction on the gold to the downside or something. But taking all stuff into consideration, it seems that this reaction, vice versa, should be an opposite direction, because hardly will get the relief on all these subjects in the nearest term. So that's why, yes, we need to keep in mind this pattern, but at the same time need to follow our trading plan and see what will happen. Because other factors that we see and other patterns that are forming here mostly stands bullish. So if we take a look at the other markets that we already have considered today in the euro currency as well, you could see that the 10-year yield has not reached yet the 3.8 target. So here it could move slightly lower, especially if today personal consumption expenditures numbers will be slightly lower as well, which should become supportive to the gold and should be negative for the dollar. Dollar itself shows bearish pennant right around the XOP target. We talked about this in details in our euro report today, euro video. So this also can't be called as a bullish sign for the dollar. So mostly shows some signs of weakness. That market can't show even minimal bounce up from the XOP, just stands flat. On the background of this cross-market analysis, well, perspective of the upper direction on the gold market also looks not bad. If you take a look at the intraday charts, here we have absolutely the same patterns as on the euro. First of all, on the 4-hour time frame chart, let's take a look where market still keeps well at this head and shoulders, and right arm takes the shape of the triangle after the strong upper direction. This is always a good sign for the bulls. Besides, as in euro currency, as here, we could get some kind of the bullish dynamic pressure, because you could see that trend turns bearish here, but price action is not. Market is forming high lows, standing stubbornly flat, which suggests the possible upward breakout is coming. Finally, on the hourly chart, As on the euro currency as well, we have more clarity on the downward action. Here you can see market has formed the ABCD and perfectly has completed and touched the confidence support 1225. That's the area that we also talked about, but yesterday we haven't got yet this ABCD pattern when we start discussion, so it has appeared a bit later. So, but right now with this downward action, you can see the agreement has been reached. Market is turning up once again. Our trend has turned bullish. So, and here you could see a minor hand and shoulders pattern might be formed on lower time frames. So if you intend to take the long position on the gold, that's the situation that you theoretically could try to use. And in this situation, maybe it makes sense, may not make no sense to hide stops right below this area, only if you would like to trade on the daily and high time frames. If you're dealing with the current entry situation, you could, for example, place initial stop somewhere below these lows, below the agreement. If hand shoulder starts working, market keep going higher, just move stops below the right arm. It will be enough, because if market indeed bullish and shows upward action, it will not return at back up, because that will be reversal, and that will become the point, the bottom for a right wing of the pattern. If something is wrong and market really is not stable and bullish setup will be at the edge of the failure, it doesn't make sense to place stop somewhere below this area, because if your market will fail, probably the overall construction will fail later. So that's simple logic. That means we do not need to place too far stops in the current situation. So that's actually in two words that we have. So returning back to the grabber idea, so theoretically it suggests that we could get this kind of the A, B, C top, D pattern somewhere to around 2015 area, right? But taking into consideration this type of action, it's very choppy and slow, got much slower than this downward action. It doesn't suggest that it should be this downward action, so that's why we have to control the performance of this grabber on a daily chart, but at the same time we should use the common sense and just see how this pattern stands in overall context. Currently, at this point at least, it seems that, well, bears have not really big chance to succeed, despite that we have this pattern. So let's see what will happen.